Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, November the 17th, the year's 2020. Let's talk trading. Precise versus sloppy. Before we get into it, just a quick reminder, these videos are for educational purposes only, and your results may differ from mine. What am I talking about? Precise versus sloppy. It's mainly about your entries. I noticed I was sloppy this morning on an entry. And had I been precise, I would have been able to exit with about 2 pips. But because I was sloppy, my stop loss got hit because I never had the opportunity to take profit. So, we talk a lot about, for example, the Walmart trade. And you can see right here, this last hour, price hit a high of 59.9. The trigger's at 60. If you rushed your entry, you didn't wait for it to hit 60 or actually hit 60.1 and actually break it, you'd be looking at a loss. So you have to be as precise as possible. Granted, sometimes price will move on you. And most of us, if we click over here, that's a market order. So for example, right here, it's at 50.1 on the ask. So as you can see, price hasn't broken this line yet. So what do? You wait, and then maybe price will pull back, and then you might be able to get in right on the 50. And that's, Walmart likes to call that the second touch. And usually he'll wait for an M5 candle, so we can switch over to M5 right here. He'll wait for an M5 candle to touch it once and touch it again. But being precise with your entry is very, very, very key. Now, there might be some people out there that want to argue about, well, if you were going for more pips, 1 or 2 pips wouldn't matter. But let's just be realistic here. We've got a spread, and right now it's 1.4. So if you add a pip on it, that's 2.4 pips you have to make up before you start to make money. So you might want to be a little more precise with your entries. Or sometimes, we might want to do a previous candle, M5 candle high break. Right there's at 47. So once again, you might want to be as precise as possible. Because for example here, let's see, the high was 47.8. And here the high was 48.8. So it's almost like no chance of a win, especially if you're sloppy. So if you actually got in at the high, you had a chance to maybe make 1 pip. If you just missed it by a pip, no chance at all. None, zero, zilch. So you really have to focus on those entries and making sure you know where price is and where you want to get in to the trade. And when you want to. So in this particular case, you might want to wait for that second touch and then go for it. Now, there was a couple of trades I got in, just right, and they paid off. But I did notice that I did do, in fact, I think it was the first trade of the day. I was probably still half asleep. I was up at about 4 a.m. my time. Actually, I was awake before then. I think I put that first trade on during that hour. But, there's just no excuse. I was sloppy. So hopefully you can learn from my mistake. In fact, at my prepper meeting this weekend, I usually, after we go around and introduce ourselves, I always like to open the floor up for questions. And this one lady goes, I want to pick the brains of, you guys that have been doing this for years. And her question was, I want to know what mistakes you made so I can learn from your mistakes. So that's just something we might have to do a series, mistakes made. So, mistake is being sloppy on the entry, not either, you know, not being quick enough and missing it, then chasing it. And if you do that, it could be doomed. And of course, a mistake is trading without your stop loss in place. A mistake would be falling into fear or regret and then feeling that pain. And one of the biggest mistakes is not taking profit before the market takes it back. I mean, you can just look and see at price movement. You can see how many times you could have been up 10 or 20 pips. You didn't take it back, and market took it. You didn't take it, the market took it all back, and then some. We've got one pair, dollar CAD, that hasn't filled that weekly opening gap. So any of you traders that popped in Sunday night or saw those, hopefully you were able to take advantage of those trades. And look at where we are. We are 3 pips below the yearly open. We actually got above the, broke out of the opening range here at the high for a pip or two. Let's see, what's the high of the day? Oh, 72. Actually, that's about what, 7 pips? Oh, 6, 7 pips. Nice little breakout there. And you see we also broke out of yesterday's high. Once again, right at that yearly open. And we're still above last month's high out that inside bar. Very few inside bars for the days and the week, but still plenty on the month. A lagging day here, only 5 pairs over 100. We had the pivot point just outside the buy zone. Not much of a bias, but if you took that bias and you took that trade, you see you hit it and then some. Second opportunity here, pro trade. Red Rats feasting. Let's put this back down to M5 so you can see where some of the triggers were. But once again, you can see with the H1, if you're having problems triggering. And so if you're in the rat zone, you don't want your stop loss inside the rat zone. You want it to be up here. So make sure you have your position sized accordingly so you don't risk more than you intend to risk. But you can see the many rat reversal here. And once again, just trading any horizontal line or you could just put an entry in there randomly. I mean, you could just say, I'm going short now. And then put your stop loss accordingly. And either price is going to come out of the rat zone or it's going to make a higher high for the day. And we know based on statistics that price usually doesn't like to close in the rat zone. It has closed in the rat zone a couple times recently, but that's not the usual. And you can see prices in the 40 level here, which is the launch zone. You can see it's launched once, twice, 2 times, 3 times. Might even launch again. And we took out that weekly pivot. On the daily, we took that out. We took that one out. We took this one out. That was missed. Weekly, last week was a miss. Almost hit the one from 10 weeks ago. Oh, price travel analyzer, pivot point. I wonder why that's up here. I guess we were doing, somebody was asking about a pivot or something. I don't remember why I had this screen up here. But you can see here on the pivots, if it opened greater than the pivot and then the low less than the pivot 68% of the time. If it opened below the pivot, high greater than the pivot 84% of the time. These pivot trades, and this is basically just next day. This isn't forever. So these are next day trades. But if you go back to this screen, this will show you the actual how many have missed and haven't been covered. So this one was missed. It would show up as a miss here, but it shows up as being covered here. Because mainly when we trade, we're just usually looking on the short time horizon. We're not looking to be in the trade for days or weeks. In and out of the wick zone, you can see it popped in here and it's popping back out. Once again, that 40 launching pad. And you can see here, there was a nice reversal trade. One of the things I've noticed, if you have a 3-ball on the bottom and you get a green candle or bull candle, you can almost just jump in the trade. And on the top, if you get a red candle, you can almost just jump in the trade. But you see at the top, if you get a bull candle, usually you don't want to jump in the trade. You want to wait for a trigger. And sometimes in this case, you had a bull candle, but if you jumped in that trade, it paid off. But rather than just jump in at the open, you wait for the break of the low. But, this is one of those ones you can see here. It was in the 40 area. Then it cleared this zone right here where that 2-ball is. And a lot of times I'll use that as a trigger point. So put the 3-ball on the bottom, price comes back. If it crosses at 2, I'll take that trade. And right now, you can see we've just run from 40 to 50. That was the first touch this hour on the Walmart line. So that wouldn't have been a trade because the actual trade was down here. That's just a continuation. Or if you wanted to, you could have stacked on and picked up a pip. But you would only pick up a pip if you had a precise entry at 50. If you hesitated or got in late, you might not have had that opportunity. And that's why it's so important. And once again, we see that here. So we barely broke that 40 line. So if you went short there, you'd be looking at a stop out. But one thing that we would have done was, as you can see, the previous H1 low was at 41. So rather than wait for 40, we would have been short at 41 and would have had an opportunity to take a quick pip. But obviously, it probably had to be really quick because it went down and closed above. It crossed below, crossed back, and closed above. So that's it, fellow traders. Don't want to beat a dead horse, but don't be sloppy. Be precise. Because it's not what you trade, it's how you trade it. So go out there and train the banks. And if this is the first video of mine you're watching, welcome aboard. Click subscribe, click like, share the video all over the internet. Click the bell so you get notified when I put out a new video, which is about 6 days a week. Take Saturday off. So this is TheRumpledOne, over and out.